Hey everyone, how's it going? My name is Richard Moglen, and welcome back to our Stock Market Outlook video sponsored by MarketSmith. And as usual, we'll run through the market indexes, leading stocks. I've got a big list I want to go through, so we'll go through all those charts here. Then we'll talk about some sentiment, the IBD Big Picture article, and finally the Wishing Wealth GMI Signal. If you do enjoy my analysis, please go ahead and take the time right now to leave me a like down below. It really helps me out and my channel. Just takes a few seconds and helps me out immensely. And also let me know in the comment section your thoughts on this market, because I'd love to hear your take as well. Getting right into it, let's start off with the Nasdaq Composite. Let's go ahead and hide this. And overall, we broke the bottom of this range last week on Friday. Really, the weakness really set in on this Thursday. We had a gap up and then basically a big downside reversal bar closing near the lows of the day on a pickup in volume, on above average volume, and then we fall through to the downside. Not a great look, and we've kind of been rejected twice at that 21 EMA. But I think it's really important, as I've said a few times during this market correction, you have to stay flexible, you have to stay optimistic, because things can turn around a lot sooner than anybody thinks. Don't get bogged down by the news or your opinions on the market, because all you have to do is really watch for leadership, watch the actual leadership stocks. When they start shaping up in groups and the overall market starts showing basically positive price action, that's the time to step on the gas when we have a new uptrend confirmed. So stay flexible, because things can turn around a lot sooner than anyone thinks. Just going back to these prior corrections, they obviously weren't quite as severe, but you can see how quickly things really turn around from looking really bad in this area to basically being in a new uptrend in just the matter of a few days, 1 or 2 weeks. So stay optimistic, and there's going to be some incredible opportunities that come out of this market correction. The next batch of true market leaders will go on to double, triple, quadruple. All you have to do is be ready and stay up to date with your homework. With that said, let's move on over to the S&P 500. Pretty similar action here, a little bit stronger than the NASDAQ. Better close as well on Friday, but obviously we still have that gap down. So even though this did have a strong closing range, not great, especially considering we have a gap here. And you definitely want to watch out to see if this doesn't get filled. That could be another sign of basically just additional weakness, and we're below the declining 21 EMA, the 200-day, and also the declining 50 SMA as well. And we had a pickup in volume on this last Friday. Moving on over to the IWO, the Russell 2000 Growth Index. This is pretty similar to the NASDAQ, a little bit worse here. Broke the bottom of this range, can't stay above that 250 level, and we had a pickup in volume on these 2 negative days. We're below a declining 21, 50, and 200 SMA, basically in a stage 4 downtrend. You can see just all this chop for a year, and then now we're basically breaking below this entire base. Definitely not a great look, but we'll have to see whether we can, find support down here and get back above this pivot and get back above the moving averages. Looking at the IWM, the Russell 2000 in general, this looks pretty similar. A little bit of a better close on this Friday, obviously because of the stocks in this index, but we're below that 200 level and below all the declining moving averages. And once again, still below this entire base right here, which has been basically resistance, as you see at this 209.05 pivot. Moving on, we've got the FFTY, the Innovator IBD 50 ETF. Always a good index to look at as well. Definitely a stronger close on Friday than the IWO, which I actually found surprising. And we've got a pivot right at this level, and we're just above, it looks like, the 21 EMA. So a little bit in the short term, stronger action than the Nasdaq Composite, the IWO. But we're still below a declining 50 and 200 SMA and below the bottom of the space, which is pretty much right at that key 40 level. So that's a quick run through of the market indexes. Basically, we're still in a correction, still very volatile. It's tough to manage risk in this environment. There's definitely opportunities both to the long and short side if you're nimble, as well as in the gold names, which we'll actually go through in just a second. So going ahead and moving on to some growth stock leaders, I always like to take a look at Tesla. Right now, we're in a stage 1 consolidation since we've undercut this prior double bottom stage 3 base. We're holding near that 200-day moving average, but not great action, although we do have lower volume on these previous 2 days. So that is a little bit constructive, but we're still below a declining 21 and 50 SMA and well off these highs. So overall, not great action, but definitely want to watch that 200-day moving average pretty closely to see if it can hold that level, because this stock really likes to respect it going back to the past and even going back to the bottom of the 2020 correction that was right at the 200-day moving average. So we'll have to see whether this can hold that level and even break above those shorter term moving averages. Next up, we've got NVIDIA. kind of a leader in the tech space, or the semi space rather. This is breaking below the range, so not a great look for the overall semis, and AMD is pretty similar. Really negative action, especially late last week on these 2 days. And we'll have to see whether this can form out a bottom here, stay near that 200-day moving average. Definitely watching these previous lows as well as the key kind of 100 level. Also going through some more of the mega cap stocks. Let's bring up Apple. This is kind of the best looking of the bunch. Still above that 200-day moving average, which is rising, but we're below a declining 21 and 50 SMA. Not a great look, and definitely don't like the action breaking this kind of bear flag here on Friday. Moving on to Facebook. This obviously had the huge gap down, and we've continued down from that point. We had a little bit of a reversal attempt, but now we're challenging that 200 level. We'll see if that holds next week, and if we can kind of push our way up here. But you can see the really rapid decline on the 21, 50, and 200-day moving average, and we're below the entirety of that really long consolidation. So definitely not a good look from Facebook here to the long side. Moving on to Amazon. This is pretty wide and loose here. Not great action on Thursday and Friday, breaking this low, as well as the 3,000 level. And you can see the RS is only 38. And we've really just been chopping all the way back and forth for the best part of almost 2 years now. And once again, really not a great look. This is a stage 1 consolidation as of this moment, but right now below declining 21, 50, a 200-day moving average. So in a downtrend for sure. Moving on to Netflix. This also had that gap down on earnings. We tried to rally a little bit, basically back into the 21 EMA area. And now we're just in a downtrend once again. And it looks like we're going to challenge these prior lows. Moving on to Google. This also is holding up a little bit better, kind of like Apple here, but we're in a stage 1 consolidation. Not great action on this Friday, breaking basically the downside of this range, and we're below declining 21 and 50 SMA. So in terms of the mega caps, things aren't looking too great. I think Apple and Google are definitely the best of the bunch in this area. Moving on to some other names. Gold stocks have been pretty strong, gold and miners. We've got FCX, strong uptrend above a rising 21 and 50 SMA. The best buy point would have been right through this pivot or through this inside day for a nice swing trade. You had a nice outside day entry here right off the 21 exponential moving average, and we followed through and broke right through the top of the space into all-time highs. Looks great. Numbers are pretty strong, and going over to the fund ownership, let's open that up. A nice increase over the past few years, and 3 high-quality funds in this stock as well. Moving on to AEM. This is another miner off the bottom showing some volume. Just wanted to point this out, that overall the group, the miner stocks are shaping up and potentially starting kind of stage 2 uptrends as of this moment after a nice long decline. This is a potential stage 1, and we'll have to watch these pivots near 58 to see if we can fully break through on volume next week. Moving on to NEM. This is another gold stock that is acting super strong. You can see the action on basically the entirety of last week, breaking through this pivot from this large cup and handle, acting great, highest volume since the base here on Friday. Not great quarterly numbers recently, but you've got decent fund ownership increase, and overall the price action speaks for itself, holding the 21 and 50 SMA during this correction in a strong uptrend. Moving on to NUE. This is a steel producer acting super strong, broke out of the double bottom stage 2 base basically early this week, actually late last week on Friday, acting super strong, just trending above the 21 and 50 SMA. Looks pretty strong. I also want to bring up some shippers. Zim is acting pretty good, although you had negative action for sure on this past Friday. We've got earnings in 4 days, so that will definitely be a catalyst. And you can see the really strong quarterly numbers down here on the chart, and really strong fund ownership as well in this really recent IPO. GSL also was a shipper that was acting pretty well. Obviously negative action on Friday, along with a lot of other growth stocks, but definitely one to watch if you're interested in this area. And this is a leading group as of this moment. You've got great quarterly numbers and decent estimates as well for the next year. And you can see there's not a bunch of fund ownership. Actually, it's a negative for me. I'd like to see at least getting to that 100 level. I think that would be pretty important. Moving on to another semiconductor, GFS is a recent IPO that was acting pretty well, broke through this pivot, but obviously negative action on Thursday with basically a fade off the highs for the close, and then fall through to the downside on Friday. Would have actually been a decent short opportunity right through that level. But overall, I like the volume to the upside recently. You can see the down volume recently has been very, very minimal. So we'll have to see whether this can tighten up and kind of mature a little bit, because this is still very wide and loose. But you can see really strong numbers the past 2 quarters and really strong estimates, and also fund ownership, although no high quality funds invested into the stock just yet. DOCS, another name worth watching. This was kind of top of my list, but then we had a downside reversal. I actually sold my position on this day, and then we had a big downside reversal on Friday, basically nullifying this entire setup and saying that this stock needs a lot more time, but really strong earnings. But obviously the price action is the most important thing. Also bringing up another name that I think people are watching off the bottom, UPST, similar very negative action here, breaking this flag to the downside right as 21 EMA, and you can see the overall downtrend here. Did have the big push on high volume, but looks like it needs a lot more time to fully develop out a potential stage 1. And then if we get a big breakout from a base, that could restart another stage 2 uptrend. Moving on, we've got CARG, Cargris, which had a huge breakout on volume. Then it's pulled back pretty darn hard. So we'll have to see whether it can form a base above 40 and kind of tighten up and form another potential tradable setup. You did have an opportunity at the HVC just basically the next day. Also worth bringing up, another similarly powerful name, LNTH. Super strong action, also really great earnings, sales margins, acceleration the past 4 quarters, great estimates as well. And you can see it's not in a leading group as of this moment, but the price action really says, look at me, something is happening here. So definitely one to have on your radar. Just look at that huge jump in relative strength, and also the super strong price and volume action, considering we are in a correction right now, and the indexes did fade quite substantially on Thursday and Friday. Next up, I also wanted to touch on a few recent IPOs that I think are worth watching. We've got Dutch Bros here, really nice action on Thursday and Friday, showing relative strength versus the market. Still having trouble with its moving averages here, as well as the 50 level. But if you can push up here, maybe form out a base under 63.20 or near that 55 level, I think it's definitely worth having on your radar. Also worth watching in these recent IPOs is SG. Nice earnings move on this Friday on huge volume, the highest volume since the IPO. And we'll have to see whether it can push through the 50 SMA and get through this key level, as well as the 30 level, which you can see it has had trouble with before. But definitely one to watch if you're interested in the space. Really nice sales growth and really nice fund ownership as well. This always catches my eyes. Also bringing up some computer security software names. We've got FTNT developing a pivot right here. We've also got it pulling back constructively to a prior pivot on declining volume. And also PanW is another name I'm watching in the space, which didn't have a great Friday. We broke the underside of this range, but we were kind of straight off the bottom on high volume. So this kind of volatility is to be expected. I don't like this bar. I'd love to see a hammer candle here, but we'll have to see whether this can firm out another potential setup, maybe undercut towards the 21 EMA, bounce back up, tighten up, and present a buy opportunity right near that prior pivot. So those are basically the names I want to go through. Let me know your thoughts on these basically stocks down below in the comment section. And if there's another one that you'd like my take on, go ahead and leave that in the comment section, and I'll try to respond to as many as I can. Moving on now to a few different sources of sentiment. Let's start with my Twitter surveys. We saw a big drop from 43.7% to only 24.3%. That's definitely on the lower end here. And over 50% of people think we're going lower from this point. So from a contrarian point of view, take that as you will, but definitely very negative sentiment out there at the moment. Looking at the name exposure next, this is also quite negative here. A big drop from 44 to now 30. Definitely constructive action from a contrarian point of view, and we'll have to see how this develops over the next few weeks. Moving on to the bulls versus bears poll, we've had that cross that could kind of confirm market bottoms. It doesn't mean that it has to happen. Keep that in mind. These are very secondary indicators to price and volume of the indexes, as well as price and volume action of the market leaders. Also taking a look at the put-call ratio, we're kind of climbing here, but still relatively low. I'd love to see a big spike up above 1.15. So that's pretty much it from a sentiment point of view. Moving on to the IBD Big Picture article, the headline is "Stocks today remain in correction, but these sectors still generate trading opportunities." Reading through the article, they discuss the outstanding jobs report here, the negative action on the indexes, as well as some oil and gas names, and also highlighting NEM, which we also went through. So overall, their take is still a market correction, and you've got some leaders up in volume and some down in volume as well. And going over to the Wishing Well GMI Signal, this is still in a red state here. The GMI score on Thursday was a 1 out of 6. But Dr. Wish does highlight SQM, which is a fertilizer name, which is also acting well. MOS, another name that comes to mind from that group. And we had a green line breakout on Friday. But overall, we are in a red state on the GMI. So overall, my current view is still a market in correction. We're in a very volatile environment at the moment where it seems like we're up 1%, then down 1% the next day. We're very news driven here. And I think it's not really a time to be pressing on the gas. If you're a traditional position trader, there's definitely some opportunities on the short and long side. If you're a quicker trader here in the gold names and the oil and gas names, as well as the other names that are showing relative strength as of this moment. But I think what's really important is to be flexible, stay optimistic, because things can shape up a lot quicker than anybody thinks. And it's really important to do the homework now so you're ready when it does happen. So you've got both your financial and mental capital sorted, so you're ready to take advantage of the incredible opportunities that are going to come out of this correction. So overall, I hope you guys enjoyed this video. If you did, please go ahead and leave a like down below, subscribe if you're new to the channel, and I'll see you guys in future videos. Thanks.